Well, Walchandnagar Industries, that's a stock on our radar on the back of CARE revising its long-term ratings upwards. To discuss this and more, we're joined by Mr. G.K. Pillai, the MD and CEO of the company. Hi, Mr. Pillai. Thanks so much, sir, for joining in. If you could confirm to us first, this rating upgrade is on all the debt in your books, and how does it change things? As of now, what is your borrowing rate, and where do you see it going post this rating upgrade?
Good morning to you. Yeah, first of all, thank you very much. Yes, what you mentioned about the rating, CARE has informed us that we are upgrading the rating from BB to BB+. It should be known that some time back we were derated, but at the same time we do feel that the CARE rating does not actually give a real reflection of the company's business and the long-term plans. Because another rating agency, Equate, has rated us BBB-, and we feel that Walchandnagar has come to that stage because for the last 4 quarters the company has been showing positive profits, and we still are not accepting the CARE rating of BB+.
Fair enough. But with a BB+ rating versus an earlier BB rating, what would your cost of borrowing now stand at? Does it come down, and if yes, by how much?
See, as of now, if you look at it, the last quarter also, we have total finance charges, which includes everything. It's almost about 19.5 crores. Today, the banks charge about 15.25% as the interest rate. I'm sure with this revised rating, which itself is a slightly better, we are approaching the bank. We should be approaching the bank this in a day or two. And I'm hopeful that we should be able to bring down the cost of borrowings, interest rates.
Okay, just to clarify, you're paying around 20 crores per quarter at around 15.2%. So your total debt in your books is what, around 530 crores?
Actually, this includes all other expenses like the bank guarantee charges, the LC charges. It's not just the basic interest rates on the borrowings.
Okay, so the total debt that you're paying interest on is more than 500 crores, right? Because okay,
right.
All right. So that's about, and you're hoping to refinance it by how much? From 15.2%? Do you see it come down to around 14.2% because of this rating upgrade? And if yes, by when?
At least we are approaching the bank that it should come down not by 1%, but at least 2%. Because one of the rating agencies has actually given us investment grade rating of BBB-. Okay. So let's see, let's go to the bank, and I hope the banks will be more supportive this time, because the company is really coming up and looking into strategic sectors in a big way.
Mr. Pillai, coming then to the company's business, in the first 9 months, you've done revenues to the tune of about 260 crore. When we had spoken to you at the start of the year, you of course had more optimistic targets. You'd said you should do about revenues of 500 crore. Be that as it may, 9 months, 260 crore of revenues. What are you likely to end FY19 with, and your FY20 initial estimates in terms of revenue growth?
Well, as you're right, the first 9 months has been almost about 265 crores when compared to, it's almost same like the last year. And we did think that we should be able to touch about 500 crores. But one of the important points, if you look at my results of this quarter and the 9 months till now, that the EBITDA has been almost 25% when compared to almost 17.5% last year. So as I said, our focus today is not much on the top line, because more on the bottom line, increasing and taking orders only those where we can have a better EBITDA. So year-end, I won't be able to say the exact numbers, but definitely it will be in line with last year. But the EBITDA will be definitely more than what we had last year.
Mr. Pillai, if I look at your numbers, you're saying, yes, your EBITDA number, your margins have improved, great. We take that point. But your net profit you reported in the last quarter is 2 crores. And other income is 3.5 crores. If I remove the other income, it would have been, in fact, a mild loss. But let's take the point forward then. You said your debt in your books, including everything, is around 500 crores. This other income, is there some asset monetization that you have done? Are you in the process of doing that? I think the last time around you had mentioned you're looking to sell some of the non-core assets. That's on the cards?
Okay. Two points. One is that actually the debtors for the company is almost about 400 crores from the various customers. Now, that is one area which has been making a big impact on us. As I say this, about a week back, one of the big projects which we have been doing in Ethiopia, that has almost in the closing stage, and we should be in a position to get back the retention money which has been retained for almost about 5 to 6 years. That will definitely bring down a lot of debtors list. Number 2. So what was the next question?
The non-core assets, sir. The non-core assets, you were talking about selling some of that. Is that on the cards? Very quickly, sir, how much money can you get from that? We're running out of time.
It has not yet been firmed up, yes, though there have been a lot of proposals coming up. Some things are almost in the final stage. I'm not very sure whether we will be able to close it before March 31st, but definitely it's on the anvil, and if not March, at least by the first quarter of next year. Yeah.
Okay. Thank you, Mr. Pillai, for joining in. Keep your eye on the markets. It slipped a tad bit more, so now approaching the 10,650 mark. The key level to watch just in the near term will be Friday's low, which was a level of 10,620. That's the level we had bounced back from. So right now, as we speak, slipped some more and now down close to about 70 points in the Nifty, while the Sensex has lost over 200 points. Thanks again for watching Chartbusters. Stay tuned. Trading Hour comes up next.